Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is January 28th, 2017. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. US stock market is still in a confirmed uptrend. I'm currently continue long the market with the strong stocks and ETFs. I use the option to trade the stocks on the earnings. Later, I give a little bit more detailed explanation. Anyhow, let's take a look at the market indices and their charts. German DAX index step up again, so it's went up to another level, so it's an all-time high. And NASDAQ all-time high, so went up again last week. So the market is in a very strong uptrend. It just continue to go up. SP 500 did another step up, so it just went up another level. Gold seems to be correcting here, so it reaches the high, broke out from the 50-day moving average downtrend, but now it's testing 50-day moving average again. Hopefully, it can find support here. If it doesn't, it broke down to the broke the 50-day moving average to the downside, then gold might resume its downtrend again. We should see how gold will do next week. Silver did the same. Oh, silver actually rebounded from the 50-day moving average. That's very good sign for the gold as well, because the silver tend to lead the gold. And this is a gold mining stock ETF. This one seems to be in an uptrend. And so looks like gold has a higher probability just rebound from this 50-day moving average. Crude oil is consolidating on a high level here. Crude oil ETF did the same. Energy stock ETF, this has been closing below 50-day moving average. So this is in a very slow downtrend here, which is surprising because the XLE broke out from here. Now it's just struggling around 50-day moving average level here. But it doesn't mean it cannot go up. It may still have a potential rebound from here. China-Asia market rebounded from this $3,044, and now it's hitting the resistance and the 50-day moving average. We should see how the market react after the Chinese New Year. This weekend is the Chinese New Year. The market closed for 5 days in China. Anyhow, FXI, this is an ETF, the China ETF, and still in this downtrend, but it reverted. Oh, it's really hard to read this. Well, this ETF has been in a downtrend for a while, but right now we should see if it can break above this previous high, $37.07. So if it can break above this previous high, then it has potential to go up again. Otherwise, right now, it's just at the resistance of this downtrend. US biotech. US biotech, oh, this is in oscillating mode, and it's oscillating with a smaller and smaller range. IYR is a U.S. real estate. U.S. real estate looks like it has reversed the downtrend here, and now it's in the uptrend, but we should guard for it not to break the 50-day moving average. It can test 50-day moving average, but if it breaks down the 50-day moving average, then this little uptrend will be over, so we should just watch it. And JETS is an airline stocks ETF. Right now it's in this range, so it's struggling. This is a previous high, $28.97. So that serves as a resistance here now. Copper is also hit the previous resistance. So it has a potential to make a double head and go down again, or it has a potential to make a flat base and go up again. So we really don't know until the chart develop further. Social media network. This stock, this ETF is in the uptrend. It's reversed from the downtrend, and now it's above 50-day moving average and above all the short-term major average as well. So it's an uptrend. TA and solar stock in a downtrend. Utility stock is in utility ETF consolidating here. Those are the ETFs. We can take a look at the stocks on the watch list. First list are the stocks that's still in the buy range. I list the buy point here. And then second list are the stocks that's too extended, which is more than 5% above the pivotal point. That's out of the buy range. So-called buy range is within 5% of the pivotal breakout pivotal point. Adobe breakout pivotal point is at $11.19. It's a 10 cents above the previous high. It's right here. So right now it's still within the 5% of breakout pivotal point. Amazon has not yet break out from this cup base. So $847.31, that's a breakout pivotal point. Alibaba rebounded the downtrend and stood above the 50-day moving average. Make a little bit of the flat base here and break out the day before the earning. After earning, it ran up 5%. Right now, as long as Alibaba can stay above $100, this stock is good. It's good to keep. So right now, it looks like it has a potential to continue go up. Fremont McMoran, this is a material stock, the metal stock, and it's a very strong uptrend, pull back to 50-day moving average and keep going up again. So right now it rebounded from 50-day moving average. That's one buy point. Another buy point would be, it's already broke out this week. Broke out the $16.42. So this stock is in the official brokeout stock, and it's already broke out and right now still in the buy range. MLM, this is also a material, building material stock. It's in the buy range. It's broke out from this flat base. As you can see, this little range here, $236.15. That's a pivotal point. So it broke out last week. Right now still in the buy range. PRI, this is the same pattern, similar. It's a very long flat base after a huge run up and broke out and still in the buy range. PWR, similar to flat base. This is actually base tilt down and broke out. 10 cents reverse above the 50-day moving average. 10 cents stock chart looks very similar to Alibaba and broke out from this little flat base. Right now it's in an uptrend. Now take a look at the stocks that's too extended. Applied Materials uptrend. Breakout pivotal point is right here. So right now we're too far away from the breakout pivotal point. Broadcom, and we talked about it right before the breakout or around the breakout time. So the breakout pivotal point is $179, actually right here. That's a breakout. After breakout, they pull back. Now going straight up. GKOS, and breakout pivotal point is right here. And still in the uptrend, but too far away from the breakout. HQY, breakout pivotal point is right here, also a little too far away. And Netflix has two breakout. We talk about it. One is here, another is this downtrend line, breakout a reverse to the upside, breakout from this downtrend line. Second breakout is $129.39 right here. If you draw a straight line here, a breakout here. Right now, it's too far. So we cannot buy those stocks that's too extended, but still there are plenty of stocks to buy that's still in the buy range. And now there are two stocks are gonna report earnings next week. One is a Tuesday, after the market close, Apple will report earning. Another is Facebook Wednesday after market close. And for the stocks that report earning, what I find is actually too risky to hold the stock outright. Well, of course, if you have a stock that's you've been held for a while, you have tons of profits, then you can hold through the earning because you still have the profits cushion. But if you try to buy the stock right before the earning, the chances are the stock may gap down. Well, of course, it has a potential to gap up, then it becomes a gambling game. If you want to play the probability, what I find is an option is a lot better. Long the call option. If you think stock has a higher probability to go up after the earning, then right before the earning, a couple days or even 1 day before the earning, if you buy the call option, buy the add money call option, that is a lot better than buy the stock outright. So for the stocks in the past couple weeks, I've been playing like Alibaba, all those stocks I've been buying the call options, and fortunately the stock, the price went up after the earnings. So the option, there will be again. However, if the stock, in case it go down, then what you lose is option premium. So your loss is limited, while your upside potential is unlimited. That is in the case you think the stock will go up. If their stocks report earning, but you think that stock might go down, a big job or something, you can buy the put option. That will allow you participate, allow you to profit on the downside. But again, your loss is limited. In case the stock does not drop, all you lose will be the premium of the option. So what to do in this market? I will continue long the market through the ETF and the stocks after the earning. After the stock report the earning, if it's a good stock and break out from the base, I will buy the stock. And I will sell the weak stocks, and I will take the small losses very quickly, use the money to buy the strong stocks. But for the stocks right before the earning, instead of long the stock, I will buy add the money call option. If I think the stock is good, but if I think stock is no good, then I will buy add the money put option. So for every stock I long, I always have the stop order in place, just in case something's changed, then I can get out quickly. That'll be all for this week. See you next week.